Hello everyone, hope you're all well, and another episode of the market. So today we're going to look at the Nasdaq 100. I do apologize if my voice is a little crackly. I have a cold. It is the time for it, isn't it? If we have a look at the Nasdaq, it had this double bottom and we were wondering if it was going to take off. It has. It popped to the upside. Then you had the release in the COVID in the likes of China. Then you had some good news around inflations and so on and so forth. So the market has had a nice bullish momentum to the upside. Now, we've seen this little trickle back, come back down into these levels. So we did have a 4-hour trade we took and very nicely hit our take profit there at a 1-to-1. We then saw this low test bar here. So I'm going to get bar replay and I'm going to get rid of that. So that's exactly what we were looking at here. We had that sort of low test bar and we had this sort of double top. It's come back down and retested that double top. Now, the problem is that it's a pretty big bar as one, and two, it's not the greatest setup in the world. It hasn't moved away and then come back. We wanted it to move away and then come back, and it hasn't. It's sort of just sat on that level, and as we can see, the next bar, look what happens. Whoa. We can see here the next bar pops in, still doesn't trigger us in, doesn't make a higher high, and comes back down. Next bar then comes back down again. It's made a lower low, but it hasn't taken out the low, hasn't taken out that bottom as of yet. And then we are here today. So is that trade valid? Yes, it is still valid. Okay. Is it the perfect setup? Absolutely not. Were we lucky not to be triggered in there? Absolutely, quite lucky. So that's why we go a little bit higher than the bar itself. So we weren't triggered in on that second bar here. So that's what's after happening here. And we're still a little bit away from our stop loss. So today we'll tell whether it is a point where we're going to be stopped out. Well, I say stopped out. If we got into this live, we'd be stopped out. But because there's a pending order, we're not in that trade. So I have a 1-to-1 risk to reward ratio on that. Why? Because that bar is quite big, and then we have that resistance there. But was that the best trade in the world? No. But was it a valid trade? Yes. And we haven't been triggered in. S&P 500, very, very similar situation. Now the S&P 500 looked like it was a better setup. We had a break and we had a retest here. We had a nicer pullback and the bar was very similar, and we can see that we've had 1, 2, and then today's little tiny bar. So forget about that. So we've had 2 inside bars on that. So it hasn't really moved anywhere. So again, on this particular one, we have a 1.41 to 1. But again, if we expect it to continue going, let's see what happens on this one. The Dow, and the Dow was the only one that I didn't think the setup was good enough. We can see it here. We've had 1, 2, 3, 4, 5, 6, 7 days. This has moved sideways. It hasn't gone anywhere. It's literally moved sideways, not done anything, and it has just, stay away from the likes of this. This one is not something that we're looking to trade. It is not a setup that we are looking at. Onto the German DAX. Again, the German DAX, we want the German DAX to come back into sort of a level. We wanted to go up and hit that level or come back down. Either or, we wanted to do one of the two. So we wanted to go up and hit the ceiling and then come back down, or come back down and then pop up and hit that ceiling. So ideally we wanted to come back down into here and then look for it to pop back up, and that's what we're looking for in the likes of this. the French CAC, and the French CAC is at a level, so we're at that purple level there. We've a touch there, 2 touches here, so we are back at that area in the French CAC. So this could be the one that indicates that the market is going to turn. So we have that hitting that area, and let's see how that plays out. It's not something I'm looking at, but again, when we're looking at this, it might give us an indication that the German DAX is going to turn. UK 100, we wanted that to drop here, but it hasn't. We've had the next phase 1. We couldn't have traded that there because we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 bars that haven't gone anywhere, and it's finally made a higher high. So it's finally popping back up. So it'll be interesting to see what happens at this trend line. So we've had 1, 2, 3, 4, 5. Will it touch this trend line and then drop, or will this continue to run? China. So China, there's good news and bad news. There's good news that they have relaxed the COVID sort of restrictions, and then in the same breath, they're now worried about the COVID restrictions, that the spikes that they're having. So again, that is something that will massively affect this economy. So make sure you're keeping an eye on that to work out whether this is going to continue going up or is it going to drop down. But ideally, I'd like it to come back up into that trend line there. And it'd be interesting to see, are we going to see it in a sell-off at that particular point? Aussie 200. So we were looking at this as a buy signal. Now again, was this the best trade in the world? Nope. We had that horizontal 1, 2, 3, and another touch there is 4. We had this sort of pullback, and then we had this, I think we jumped in on a 4-hour bar there, if I'm not mistaken. Let me have a quick look. There we are. We jumped in on this 4-hour bar, popped up, triggered us out, went back up, come back down, went back up, and then a tiny little bit profitable. But again, here we were triggered in and then triggered out. Would that have hit a 1-to-1 for us? Let's see. Doesn't look like it. No, 0.7 of a 1. So I wouldn't have hit a 1-to-1 for us. So got triggered in and triggered out on that one quite quickly. And that's the problem with having pullbacks that are not deep enough. Then they trigger you in, trigger you out quite quickly, and then sort of take off. So at this present moment, this is not something we're looking to trade. Sort of stay away from it and let it have a decent pullback. We want that to continue going up and then pull back into this level. So that's what we're trying to do. We'll let it run, then pull back, and then go. Japan 225. Similarly here, we've had a little pullback again. We've had 1, 2, 3, 4, 5 bars, and then yesterday or today it's taken off. So again, nothing massively jumping out at us here to trade this. So with these indices, we are pretty, what would I call it, stagnant. So it's not a whole lot for us to sort of look at and trade at the minute. If we go on to the likes of US oil. So US oil had a really nice drop. Anyone who took that trade, well done. It hit your 3-to-1. Again, this particular one here, we talked about potentially having a limit order on this. You'd have been triggered in and then triggered out quite quickly on this particular one. You probably would have hit a 1-to-1 on that. You've hit a 1.27 to 1 on that if you'd have taken it. But if you had had your 3-to-1 on this, you'd have been triggered in, triggered out in this double bottom, and then it went again, depending on where your stop loss is. And again, it comes down to stop loss placement. And as you can see, there's the previous low. And look, that one there made a lower low, which is massively annoying. So anyone who had a 1-to-1, well done. You had a profitable trade. Anyone who was a little more aggressive and wanted more of it, you didn't. You were triggered in and then triggered out quite quickly. Problem with the likes of these is we never know how big these bounces are going to be on these floors and whether they're going to do that again, double bottom and then take off. Natural gas again, look, we got a 1-to-1 out of this. Well done. Anyone that took that wouldn't have been looking for any more because we have a pretty soft floor here along here. So bounce. Okay, it's rejected a couple of times. So we had a pretty soft floor there. So I wouldn't have been looking for any more than a 1-to-1 there. Would I have been looking for a buy at that particular point? No. I would have liked to have come down to this purple line here, or bluey green line here, but wanted it to come down there before it sort of turned. So a trade that we're in at the minute is cotton. Okay, so cotton had a really nice setup, but it had a couple of things that we weren't so happy with. Now, one of the things that it had that we weren't happy with is that it is a weekly phase 1, weekly phase 2, weekly phase 1, and then this is the weekly phase 2. So we had the question whether it was going to go back to this trend line, or we have a bounce here. So we've had 2 touches, and then on this third touch, is it going to bounce again? And these are sort of decisions that traders sort of live and die by. You can never 100% guarantee anything, but look what's after happening. We've had our double top, and we've had a nice little run to the downside at the moment. And exactly where we are now, we're 1-to-1 up on this particular trade at this present moment. The question is here now is, do we let this run? Do we let it run down to this floor, or are you happy to jump out of this trade? And this is where your trade management comes in. This is where you have to look at what you're doing, how you're managing your trades, and this is where you have to sort of work out, is this worth it, or are you better off protecting some stuff? So there's a couple of different ways you do it. Now, one is you part close the position. So you close half the position, and then you move your stop loss slightly inside break even. And that means then you have 0 downside on this. You've already banked half of your 1%, and then you let this run. The second way of doing this is part closing the position and leaving your stop loss in the very same place. So this means then if you're 1% up, this means that, just imagine you're risking 100 quid. It means that you're banking 50, but there's also a chance that you lose 50. So you break out net 0. Okay, so that's another thing that we sometimes do with our trades. The third thing you can do is move your stop loss just slightly inside break even. Now, why I say slightly inside break even is because there are going to be some rolling charges when you're trading any sort of CFD contract like this. There's always going to be a rolling charge. You're always going to get some sort of fee. So the idea is move your stop loss slightly inside that to cover that fee. Now, that fee could be anything between £1, it could be 5 to 10 quid, depending on how much that you're risking. Okay, so that would be the first thing, and then you leave it alone. And then the worst case scenario is you get back the fees, the admin fees that you've spent on the rolling charges. The third thing you can do is, when you're placing this trade, is click on a trading stop loss, which means every time it goes down 1%, it moves. So in this particular scenario, we have at the very tip of that bar right there, we were 1.15. So that means that the software automatically trails this, and you at the present moment will be 0.15 in the green by a trailing stop loss. And everything over 1% that it goes, it will run and it will bank it in. So the idea is that you want it to continue going into phase 1. You never want a phase 2. If you have a phase 2, you will be stopped out on a trailing stop. You just want it to continue going in its phase 1. And in that particular scenario, then a trailing stop loss is brilliant. If you can catch something that continues running, it's absolutely brilliant in that sense. And then I suppose the last thing is you leave your trade alone. You place it with a risk to reward. You place it with a stop loss. Stop manipulating your trades and just leave them alone. So there are probably there are 3 or 4 different ways of managing your trades, and it's something that I go through with students, and it's also something that you should have done before you place the trade. You should have a goal. You should have an outline on this, and once you have a goal and outline, stick to it. Don't be manipulating it. All right. Also, what we should have is we should have an Excel spreadsheet where we are going through the actual trades that we placed, whether they're wins, whether they're losses, and everything, and we should be marking them down and then checking whether if it was a 1-to-1 strategy would it have won, 2-to-1 strategy would have won, and a 3-to-1 strategy would it have won. This is something that I talk about on my boot camps. So anyone who has done my boot camps and purchased that, I would say go back and have a look at that section. It's still on the website, it's all recorded there. Make sure you go back and have a look at those. But thank you very much, everyone. If you want any, if you have any questions, don't hesitate to put them in the chat box or reach out to me on Henry or contact at henry-ward.co.uk. Thank you very much, everyone. Have a lovely day. Bye bye.